Imagine waking up, checking the markets, and seeing SoFi stock once again crushing expectations. That's exactly what happened today, and it has left investors buzzing. The question everyone is asking, what's fueling this momentum, and can it continue? In this video, I'm going to break everything down for you, from price action and volume to short interest, options activity, and the big picture catalysts that could push SoFi into the 30s and beyond. So stick with me because by the end, you'll see why this stock is one of the hottest in the fintech sector right now. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi just had another powerful session in the market. The stock jumped over 4%, outperforming nearly every other fintech peer, most of which were in the red. Today's trading range was between a low of $26.94 and a high of $27.77. And with that move, SoFi set a brand new 52-week high. When you look at the technical picture, especially through Elliott wave analysis, the trend suggests that higher highs are still on the horizon. Trading volume was also strong. 66 million shares changed hands compared to the usual average of 63 million. That's a clear signal that investor interest remains elevated. Interestingly, there wasn't any official company news driving today's rally. No SEC filings, no announcements. The move largely rode on broader market sentiment. One side note that sparked conversation across the market was former President Trump's post about potentially shifting U.S. corporate reporting from quarterly to semi-annual. Now, some countries already follow that format, but it's a big debate in the U.S. While the news didn't really shake markets today, it's worth keeping in the back of your mind as regulators and companies continue to weigh such changes. Now let's shift to short interest. Shorts returned around 80,000 shares today, and more covering is likely over the coming days. Currently, about 8.4% of the free float is shorted, which equals nearly 100 million shares. Days to cover has dropped significantly from 2.3 back in mid-July down to 1.4 now. That suggests shorts are losing their grip, though they're still extended. If SoFi continues building momentum, especially into the Q3 earnings release, we could see short interest fall closer to 6%, at which point bearish pressure won't be nearly as big of a factor. Options activity also tells an important story. Today saw about $98 million worth of calls traded against 17 million in puts. Around 43% of that flow leaned bullish, and net premiums rose by 1.6 million. While nothing explosive stood out, the overall tone of options activity points to bullish expectations, with many traders betting on a range of $28 to $29 by week's end. And here's the kicker. If SoFi pushes past $30, market makers may need to extend strike prices beyond $40, which would send a major psychological signal to the market and attract even more buyers. Of course, bears still exist. They're looking for a pullback toward 25.50 to 26. The only obvious catalyst for that kind of dip would be if Federal Reserve Chair Jerome Powell surprises everyone by delaying interest rate cuts. Some investors online even joke about Powell being the wild card in all of this, spinning narratives for political reasons. As of now, though, markets are pricing in a nearly 96% probability of at least a 25 basis point cut this month. Some firms even argue for a 50 basis point cut, which would likely send stocks, including SoFi, absolutely skyrocketing. Looking at institutional flows, there were some massive trades today, both on exchanges and in dark pools. 11.5 million, 6.2 million, 2 million, numbers that prove big money is watching SoFi closely. Volume in general was higher than average, which wasn't true across the market. That means institutions and algorithms specifically targeted SoFi today, reinforcing the bullish trend. Algorithms especially played a bigger role, which makes sense in an environment where momentum is strong. Technically speaking, the setup looks clean. SoFi is trading well above its 10-day moving average with very little selling pressure visible. The nearest strong support is at 26.54 cents, which doesn't look likely to be tested soon. On the upside, 27.96 is the next resistance level, and clearing that puts $30 right in sight. Based on Elliott wave projections, as long as SoFi holds above 24.12 cents, the stock is poised to climb into the 29.27 to 30.56 range. If it crosses the $30 threshold, market makers will adjust and retail traders will start piling in even faster due to FOMO. What's even more intriguing is the long-term picture. SoFi has been outperforming peers for one reason. Investors know a major catalyst is on the horizon: crypto. Management has consistently pointed toward 2025 for the rollout of crypto services. Even though the exact timeline hasn't been nailed down, this expectation alone keeps buyers committed. It's a powerful reminder that markets often trade on anticipation, not just hard data. On the unusual options side, activity was mixed. For example, there was a $19 put bought for September 26th, a $28 call sold for October 17th, and some bullish $27 calls and puts entered for this week. While the flow isn't one-sided, the general takeaway is that traders are positioning aggressively in both directions, which is typical before a stock tests a critical psychological level like $30. Let's also zoom out and consider valuation. SoFi currently trades at a forward price-to-earnings ratio of about 85. Wall Street isn't shy about criticizing high multiples. In the past, when SoFi's forward PE hit the high 60s, skeptics pounced. With today's valuation, you can bet some analysts are ready to sound the alarm again. But here's the reality. Innovative companies with strong growth potential almost always trade at premium multiples. That's not a weakness. It's part of the growth story. One last point worth stressing: performance. SoFi stock is up nearly 250% over the past year. That's a staggering return for any stock, let alone one in the highly competitive fintech sector. It shows that despite all the skepticism, this company continues to prove doubters wrong. Long-term investors who held strong, or even bought in at single-digit prices, are now reaping the rewards. And while it's tempting to wish we'd all gone all in back at $5, the lesson here is that the story isn't over. So what happens next? If rate cuts move forward, if crypto launches on schedule, and if the company continues to execute, the path to $30 and beyond becomes clearer by the day. The key now is to watch how the stock behaves around those critical support and resistance levels, how short interest trends into earnings, and how institutional flows evolve. At the end of the day, SoFi is becoming more than just another fintech. It's turning into a market leader, one that commands attention and consistently defies expectations. Whether you're bullish or skeptical, the numbers speak for themselves. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.